and we want to make certain that you all take notes. It's very important. So without further ado, I'd like to introduce to you our presenter, Fern Alvarez. Fern has worked at American Airlines Credit Union for over 6 years. Five of them were in one of our greatest departments, the Payment and Collection Recovery Department, and our Bank Secrecy Act group. Fern is a certified financial counselor and is still active as a BSA administrator. Fern says that her favorite part of her job is that she loves helping members achieve their financial goals. Everyone's goals are different, but overall, the end result is almost always the same. Fern is happily married and has a 13-year-old daughter and a 4-year-old boy. A couple of fun facts about Fern is that she likes to work on her budget as she's a numbers person. So the right person for this, definitely. So Fern, um, she also loves to share what she has learned throughout the years and what has worked and what has not worked for Fern. So again, experience involved here. So Fern, the floor is yours. Thank you so much, and we'll catch up in a couple minutes.
All right. Thank you, Butel. We'll definitely catch up here in a little bit with some poll questions. I want to start off today by going by today's topic. So, fun fact though, 58% of people live paycheck to paycheck. So today we're going to kind of discuss if we think there will be a recession, what should we do to prepare in case there is one? How to evaluate your expenses, debts, and cash flow, how to create a spending plan, help with reducing debt, increase your savings, tips to recession proof your budget. So, we'll give you some tips to save some money. And lastly, we'll talk about a new tool that can help with paying off debt or saving money. So, here we go, Butel. You're back. So, poll
That's
question.
me. Yes, Fern. Thank you for that introduction, that going to what is going to be discussed today. So, those out there in webinar world, please, do you think there will be a recession? Yes, A, B, no. Um, Fern, you know what? I heard this word recession over and over and over, and we're giving a couple of time allowed for our webinar. The people that join us can answer the question, but recession seems to be a very like negative word, I guess, overall. Um, Again, we'll see what the people think if we are going to go, there will be a recession or not. So we are waiting for our audience to answer. We got a couple more seconds left. And we see very good participation from our audience. Thank you for everybody that is doing so. So let's see what we got. So it seems like the majority believe that there will be a recession. Uh, so with that being said, I guess we better listen to what you're saying in order to be proofed, right?
Right. So,
All right, back to you.
9% of you guys said that there will be a recession, and 21% there won't be a recession. So, we'll talk about that. See what um, economists actually look at. So, here are some things that are taken into consideration when determining if there will be a recession. So, one of those things is inflation. So, where is inflation currently at, and where do they want to be? The economy, is the economy growing or is it slowing down? They look at labor market. So, do they see a demand for labor or is there more unemployment? Interest rates. How are the interest rates affecting the market? Real estate, they take a look at that as well. Inventory, just keep in mind, inventory has remained very low. And this is also what causes the prices to go up. A lot of homeowners don't want to sell their home because they have a low interest rate right now. Now, if they were to sell their home, they will have to go into a higher interest rate if they sell. So that's the reason why real estate is the way it is right now. Another thing they look at is consumer debt. Do they see an increase in credit? Do they also see an increase in delinquencies? So they took a look at all of that. Now, every economist looks at different indicators, and so they will have a different answer to this question. We really want to help you by being ready in case this does happen. You just don't know. I do want you to remember not to panic, as recessions have happened regularly over the past century. So recessions are common. They're not, they do happen. So just don't panic. All right, so what should we do to prepare in case there is a recession? So unfortunately, we don't have a crystal ball and we won't know for sure where everything is heading, which is why it is best to start by evaluating your finances. I would start with a wellness checkup to determine how much debt you have and how much you can put into your savings or emergency fund. The way we do that is by assessing all your incoming and outgoing, which leads me into the next slide. So the next slide is going to give us an idea of how we can do that. So we can assess your debts and expenses by listing all your debts, smallest balance to largest balance, include the interest payment due date and payment amount. Pay off all the debts with the smallest balance if you are able to. Contact the lenders for your debts and see if they can lower or defer your payments. If not, see what type of relief programs they offer. Some lenders offer wonderful programs, so make sure you're taking advantage of that. For the lenders that do not offer anything to help, you can consider possibly refinancing the loan or consolidating the debt. List all your expenses. This includes how much you spend on groceries, bills, dining out, entertainment, etc. Now, having fewer and lower payments can help you get through a time when you might temporarily lose your income because of a recession. A step to take when preparing for an economic downturn is to evaluate cash flow. So with cash flow, we want to add up all sources of income, all your money coming in. You want to add up all your debts, all your expenses, and subtract your debts and expenses from your income. Doing so can give you a clear picture of how much money you have to work with each month or each pay period. Now, if debts and expenses are more than your income, I would look at reducing or eliminating some expenses. And lastly, you want to build a spending plan utilizing these numbers. So when I talk about the spending plan, the spending plan is the foundation of any financial goal. Now, I cannot stress enough, if you don't have a spending plan, you don't know where your money is going. So after you have created a spending plan, you can see how much you can put towards debt or towards saving. So the same with the cash flow. We want to gather all your bills and your statements. Now, what I would do is I would go back 2 to 3 months of expenses on your statements. So gather up your credit card statements, your bank statements, all your statements, gather all those up. And then go by each transaction and categorize each transaction. So if you pumped gas, list that as gas. Groceries, list as groceries. You're going to make a list of all your expenses. And also find out, see how much you're spending on variable expenses like groceries and dining out. You won't believe, it's surprising to see sometimes how much we spend on dining out, especially. We don't even see it because it's so expensive nowadays. You want to determine your needs versus wants. So, dining out is a want, right? It is a want because you could easily eat something at home, but you want to determine that and determine what is priority. And of course, you want to make savings a priority. You want to make sure you're saving, whether it is retirement, it is in your emergency fund, a savings account. Want to make sure that you're saving for a goal. You want to determine all your sources of income, determine all the money that's coming in, and then subtract your income from your expenses until you get to zero. So you want to give every dollar a purpose. Every dollar that comes in has to have a budgeted amount towards an expense, whether it's bills, your mortgage, or anything related to your expenses. You want to make sure that you have your income set aside to cover all your bills, of course, transportation, bills, utilities, roof over your head, that is priority, okay? So, and move on to paying off debt. So there are different methods that you can utilize to pay off debt. Every situation is different. And so when we review our members' accounts, we always determine what is the best solution for them, because one solution might not be good for them, but another one will be. So every situation is going to be different. So if you come to us and we work with you, we're going to determine, okay, this is our recommendation. This is what we recommend you do. Of course, it is up to you if it is or not. Maybe you can discuss it a little bit further and see if that benefits you or not. The first one is going to be the debt snowball. So the debt snowball, what that is you pay the lowest balance first. The pros for that is that you get a greater sense of satisfaction, especially if you have those small balances. Those are going to be so easy to knock out. The cons is that you don't save as much money because it could be that, you know, you're paying off something with a higher or a lower interest rate than versus your other credit cards. So don't save as much money. So what you want to do is you want to pay down debt by starting with the smallest balance first. You're going to make all minimum payments on that smallest balance. Make all minimum payments on all the other credit cards or debts, and you're going to focus on paying off one debt at a time. So smallest balance at a time. So once you knock out that first small balance, then you move on to the next one. You're going to take that extra, once one debt is paid, you're going to take that extra payment and apply it to the next smallest balance. And you're going to keep going until you're done with all your debts. And that's how the debt snowball works. Now, the debt avalanche is different. So on this one, you're going to pay the highest interest rate first. So the pros for that is that you do save a little bit more money because it could be, you know, the highest interest rate one is going to save you the most money. So cons for that, though, is that you may get discouraged a little bit easier because of the fact that if you decide to go with the highest interest rate, it might have the highest balance also. And so because of that, you're not going to get that satisfaction of continuing to pay off. So that's the cons right there. So you're going to organize your debts by interest rate. You're going to focus on paying off the highest interest rate first. You're going to make all minimum payments and focus on paying off one debt at a time until you're done with all of them. Now, like I said, it is the most cost-effective strategy for borrowers who have high interest on their balances. You're going to save more money there. And lastly is the debt consolidation. You're going to combine all debts into one payment. Now, the pros for that is that it is just one easy payment. The cons, and believe me, I've seen this a lot, is the risk of that is accruing debt again, and after that, approval may be more difficult. So the good thing is, you know, you refinance debt under a new loan, whether it's loans and credit cards together, you refinance that into one loan, debt consolidation loan. It does make it more manageable because it could be a lower payment than all your debts put together. So that would be a good thing there. You know, your interest rate might be way lower than your credit card interest rates. And of course, the payment terms could be anywhere from 60 months and above. So therefore, that is going to decrease your payment amount. But keep in mind that if you do this, I really want you to think about it. And if you're very disciplined, then go ahead. I would definitely either close your credit cards or I would cut them up temporarily until you finish paying off that consolidation loan. Because I'm telling you that I've seen people go into this debt consolidation, combine all their debts, and then turn around, use their credit cards again, and now they're in the same worse spot than what they were before because now they have a consolidation loan and they have credit card debt as well. So it's be very careful with that. All right, so we have covered a lot here, and I think it's time for some questions. Do we have any questions in there?
Well, first of all, Fern, this is very eye-opening, everything that you're mentioning. And of course, one of the questions that we have is, what can the credit union do to help either with debt consolidation? I know you mentioned that we have two different plans, the avalanche effect and the first one, the snowballing one as well.
Yeah.
Um, how can the credit union really help those that are listening to us today?
So the credit union does offer consolidation loans. So we do offer those loans. Now you will go through a loan officer and submit an application online, and you can definitely do that, and um, they can do that loan consolidation. Now, if you want to go in deeper, kind of take a look at all your finances, see what we recommend, then at that point, I would definitely recommend speaking to a certified financial counselor. Anyone in the financial wellness department can help, including myself. And so we can evaluate just what I talked about, evaluate your debts, your expenses, and your cash flow, and determine what is the best solution for you. Because, like I mentioned, not everyone is going to be the same. So for some people, it's probably going to be the debt snowball. Some people, it's going to be the debt avalanche, or some people could be the loan consolidation. So we will definitely guide you in the right direction and kind of talk to you regarding that and see what you think and which route you would like to go as well.
Good. And there's no cost for our members to come to you guys to talk about this and create a work plan on this, right, Fern?
That is correct. No, we do not charge anything. This is free, a free service to credit union members.
And they can reach you guys online, and you guys can do like a webinar itself or a conference call with them as well. Because I know you guys are down in Dallas itself in Texas, and if somebody from Miami or somebody from here, from the city of brotherly love, they need
Yeah.
some help, they can reach out to you, and you guys can do like a WebEx with them or something like that.
Yeah, so we offer over the phone. It could be over the phone, it could be WebEx, kind of like we're doing here. It can also be in person. So if you're in the DFW area or you're flying through the DFW area, you can definitely stop by and talk to one of the counselors. Of course, it is appointment basis. So if you know that you're going to be in the DFW on a certain day or a certain time, then definitely call our financial wellness department so they can schedule during that time.
Um, it's a consolidation loan different than a unsecured loan. It's a question that we got in as well.
It's basically the same thing because of the fact that a consolidation loan is not secured. So secured means it is either an auto loan, so there is some type of collateral with that loan. Because the consolidation loan is not attached to anything collateral, then it is considered an unsecured loan. So unsecured loans could be um, personal loans, holiday loans, loans that we offer And then the collateral loans are auto loans, boat loans, mortgage loans, things like that. So those are the difference between the two.
And Fern, correct me if I'm wrong. If they do a collateralized loan, the rate should be a lot cheaper, correct? Because we have something like an auto loan that they can get the benefit of whatever they have available on the car as available cash flow on it.
Right, so that would be like a refinance cash out. So that's not that won't be considered a consolidation loan, but it would be like a refinance on your auto loan. So that is collateralized and it's
And
a
they
secured
and
loan.
they can use those funds they get from the auto loan to pay the debt, right? Lower the debt
Right,
or lower the interest rate that they're paying, correct?
correct, yes.
Nice. And we also have the credit cards that our credit cards have lower rates than most credit cards out there
Hmm.
that can also assist our members out there to improve their financial wellness.
Yeah, definitely. I've seen some offers that have gone out
Hmm.
on 0% interest for 6 months on the credit cards as well. So, um, it just depending on your limit that you have with us, you could definitely take a look at that and see if that is an advantage to you.
Yeah, if they open one of our new low rate credit cards, that's when they get the 0% interest rate for the first 6 months, and then they whatever they rate where they quoted at the time when they got the credit card, that's what they're gonna be then paying on it. But most likely it's gonna be a lower rate than what they have now, usually at 25, 28% itself.
Right, yes.
Good.
It just will very depend on the situation
Mhm.
and what you have going on. So everyone is going to be different. So we'll make some suggestions, some recommendations, and then we'll go from there.
Yeah, that's the best part of this, that you guys will talk to the member and offer
Hmm.
them, this is what you can do, this is what we suggest. At the
Hmm.
end is what you really want to do. But again, the credit union is always looking out for member owners, making sure that they get financially fit as soon as possible and avoid paying extra interest that they really shouldn't be paying. Fern, due to time, I'm going to pass on again to you so you can continue with the webinar, and we'll get back later on with more questions. Is that okay?
Sounds good. Thank you, Patel.
Thank
All right.
you.
Now we are going to get into the fun stuff. But before we do, let's get a feel of the room with a poll question. So
All right, all
I don't
right.
want
That
to
is
know,
correct.
yeah, if anyone is prepared for an emergency currently.
Yeah. So again, those out there in webinar world, please take the time and the opportunity to join us on this polling question. And again, it's just a click away. So poll question number 2 is, if faced with a financial emergency costing $1,000, would you be able to cover it without borrowing money? A for yes, B for no. Uh, Fern, I don't know. I'm not certain. I read a lot of stuff and I try to educate myself, but there's a pretty high number out there of Americans, not employees of American Airlines. I just want to make sure of Americans that don't necessarily have $1,000 on their savings account.
Yeah, if you tell that is correct. So definitely, $1,000 is, the minimum that you should have for an emergency. There is a maximum, or not a maximum, but there is, you could save more for an emergency. We'll talk about that in a little bit here. Keep in mind, everyone, this, it's completely confidential when your answers are confidential, so we don't see who's answering what. So we're gonna move on and see what the poll question answers are, Butel.
Correct. 56% says yes, that they're able to cover it. And then the difference either didn't answer or they said no. So it seems like we're balancing ourselves within a 50-50 ratio of those attending the webinar that have it and the other half that don't. So they're in the right place to learn
You,
how to get
they,
that money saved, right?
yes, they completely are. I'm so glad that we got 56% of people can cover an emergency of $1,000. That is great news. So just a fun fact here, believe it or not, 56% of Americans would struggle to pay for a $1,000 unexpected expense. So how much should we be saving for an emergency? Well, ideally, you would want to have at least 3 to 6 months of expenses in case of a job loss. So now 3 to 6 months of expenses will cover an emergency in case of job loss. So that doesn't mean that your lawnmower broke down and now that's an emergency. No, that is something that you should already have in place to cover, home repairs or things like your lawnmower, things, um, just different things that are unexpected, but it's something that should be covered within your budget. Now, the 3 to 6 months of expenses, that should just be for in case of a job loss. Right, so now you want to focus on savings. Of course, paying off debt is going to help you with saving money. Because you never know, there may be fewer jobs available during an economic downturn, and companies may have to lay off people to help reduce their own costs. I've been seeing that throughout the year. Still not significantly as the previous recession. Is not as bad. I just heard things here and there that it might be a very mild recession. And some people are saying there might not be a recession at all. And some people are saying there will be. So, but you want to be prepared, right? You want to make sure you have the savings in place. So some of these strategies to start saving is you can set up direct deposit. Designate a certain amount to go into a savings account. So one of those things is you can set up your deposit to go into an account where you don't see it, right? You don't see it at all, so that way you don't have temptation to dip into that money. And here at the credit union, you can actually hide whatever account you don't want to see. And so out of mind, out of sight, so that can help you not dip into that savings account, that emergency fund. Now, compartmentalize your savings. So use multiple accounts to stash money for different goals. So like I mentioned before, you want to make sure you have money for, home repairs or just unexpected expenses separate from your 3 to 6 months of expenses, because your 3 to 6 months of expenses are going to be for that job loss. But things for goals, like maybe you want to purchase a car in a couple of years, or maybe you want to purchase a home in a couple of years, you want to make sure you have a savings account or multiple accounts to use for that specific goal. Put money in an account that is not easily accessible, like a share certificate, IRA, or education fund. So like I mentioned before, you don't want to see this money. You don't want to easily get this money. So you can do something like a share certificate. That way, right now the rates are really good. So, and I believe they're going to continue to increase. It might be because of they just increased again. So definitely increase your savings amount whenever you get a raise. So this is very easy to do because if you didn't have that money before, then you won't miss it. You didn't have that money before. So you can save that raise. You can save half of that raise. You can put another half or a third of that raise towards a specific goal that you're saving for. So you want to increase your savings when you get a raise. And another way you can strategize your savings is by money saving challenges. So I remember back when I was going through my debt-free journey and my savings journey, I was in my 20s, and I didn't know how to save. I had never saved before in my life. So um, this these challenges actually helped me and helped my brain kind of turn and say, okay, this is how you save. So after that, I became a natural saver. But prior to that, I did not know how to save. So the first one is a 52-week challenge. So week one, you save $1. Week two, you save $2, and continue on each week through the year by 52. By week 52, you will save $52. So each week is going to be that amount. And for the year, you have a total savings of 1,378. I remember the first time I looked at that and I saw that money and I said, I can't believe I saved all this money. Like it felt so good, very rewarding. So that's what's going to help you start saving. The next one is 30-day no spend challenge. When you challenge yourself not to spend anything extra or that's not necessary for 30 days, that is going to help you out. You will spend money. So, like, for example, if you need to spend money on food, medication, gas, things like that, then of course, the necessary stuff you want to spend money on that. But you should also discuss this with your family so that you could all be on the same page and work together. Now, you can also encourage your family members to do the same. Make it fun and challenging. Look for free things to get during this time. When you have to buy food, use coupons. Get the 2-for-1 special. So that's really going to help you out. And of course, limit the amount you spend. So I would definitely cut that spending. There's some other challenges out there. I tried something called Shelf Timber once, where you don't you use all of the food and you have you in your pantry, in your fridge. You don't go to the grocery store unless it's for milk, bread, and eggs and things like that. So I did that. That was a September challenge. So I did that in September and it worked. So definitely look at savings challenges. Save the change challenge. So let's say, for example, you go and spend $2.20 at the store buying some gum. And those 80 cents, you save them. So we'll talk a little bit more about doing that as that is a new tool that we have in the works. So we'll talk about that later. No dining out challenge. So try not to dine out. And it could be hard. So I would definitely take baby steps on this one. So maybe start for the first week, no dining out, then bump it up to 2 weeks, 3 weeks, and hopefully a whole month. It is a little harder, so I would definitely start out small and then move up. And then the $5 bill challenge, you can save every $5 bill you get. So every $5 bill you get, put it in your piggy bank. Those are some good challenges to start by, so you could start saving. All right, Butel, we're moving on to your next poll question.
Correct, Fern. So those out there in webinar world, this is one that you can type a short answer on the question that what I'm going to ask. What is your favorite tip for saving money? So Fern gave like 5, 6 different examples of how to save money. Fern, we got a
Yes.
new we got a new hire. She's not that new, but she's gotten me of spending money with lunch. So instead of saving money, I'm
Yeah.
spending $10 to $15 every day for lunch. So the five savings is like getting, depleted little by little. Instead of saving, I'm going backwards. What can you tell me? But how can you help me?
That does happen. And you know what? Like I noticed that um when I like Chipotle, right? So when I go to Chipotle, it's like $20 plus for the whole meal for just myself. So it's expensive. Everything's gone up. So I can definitely understand. I would take your lunch. Take your
We might
lunch.
have my
Or
wife
do
make my
the
lunch, right?
challenge, no dining out challenge. So that's kind of what I did this month. Like when I'm in the office, I told myself I got to bring my lunch, and so far it's been working.
I need to tell my wife the no eat out challenge. She went to see that new movie, the Barbie movie,
Oh yes,
and she spent almost $90 with her girlfriend for lunch, just
oh
for lunch. So
yes,
just imagine that's not helping the situation. I'm going to need snowball, avalanche, debt consolidation at the end. I'm going to need your help for sure.
yeah, it's expensive, that's for sure.
Yeah, yeah. So
Everything goes.
we got like 10 more seconds, and let's see if we can get some of our tips from other people that they are providing here. Let me see if I can open this here. Give me a second. So I'm gonna try to read this here from the side. Some people say pay cash, have some automatic transfers to savings. Somebody already done it, the no dining out challenge.
Good.
Carry a refillable water bottle and don't buy single serve beverages. So stay away from sodas. Water can be expensive. Right now, like I said, we're here in Philadelphia at the airport, and the water is like $5 a bottle
Oh no.
of water. So uh, do direct withdraw deposit to an out of sight account, like you mentioned, that you can hide. Uh, Buy things that you really need. Don't necessarily go with the Air Jordans. Go with something a little less expensive, I guess. So not necessarily go like I just walked by the store here at the airport and I saw a
Mhm.
purse for my wife because we just celebrated anniversary. They
Oh,
wanted to
happy
charge
anniversary.
they wanted to charge me $500 for this Coach purse. So I said, you know what? I gotta save some money. So we're not doing that. That was my challenge. Don't pull my wallet for my wife. So with that being said, thank you to everybody out there that submitted their tips. Hopefully the ones that Fern provided, and probably my sad stories of spending money that I'm learning at this webinar as well, how to hold back, how not to spend so much, talk to my coworker about spending money for lunch. You know, I'm trying. I'm working out with her to see if we get a happy medium piece here. So
There.
back to you, Fern. We got about 20 more minutes on today's webinar, and we know there's still a few things out there that we want to make sure that that they're covered. All right.
Definitely. So the next slide, we're going to talk about some tips to recession proof your budget. So I'm not going to go over all of these because I do want to make sure that we have enough room for questions at the end, as well as a couple more slides that I have here. So just want to let you know, right? Cancel expensive subscriptions. Go through your subscriptions once a year and make sure that you're kind of eliminating or calling them to get to negotiate. Um, and then talking about the food, we want to plan meals in advance and stick to your grocery list. So always what I do is I always plan for the following weeks. And then I plan for the following week, write down my grocery list, and then I go grocery shopping. I see that it is easier for me to order online versus going in the store. When I go in the store, I tend to overspend versus ordering online and picking up. That is a lot faster and I save a lot more money. You want to also buy in bulk for things that you use often and shop used when possible. You know, Facebook Marketplace is a very good place to shop for things. I've done that myself as well, so I think that it's also very good. Okay. All right, so this is the tool that I really wanted to talk about. It is a new tool um, that can help you pay off debt or save. So where you will find this is in the mic, and I know it's very tiny down here, but I really try to get it in here. So when you go inside the website to the credit union website, on the left side where the menu bar is, you will see marketplace. And so the tool is called changed. Now, if you're in your app, then you will click on the menu, and then you'll see the menu, and then it's going to show Marketplace. So the tool is called Changed. Um, Now, this is not a credit union product, and I do want to let you know that there is a fee to use. This is an app inside the credit union. So the features and the benefits for this app is you can watch your debt shrink. So Changed automates your small savings into your debt payoff progress. You can track how much each payment saves you in time and interest. You can see how much sooner you will be debt-free based on your debt and savings. So what it does is anytime you go to the grocery store or anytime there is that change, it's like save the change, right? Instead of you doing it manually, this is the app that does it for you. So it accumulates throughout the week, all of your change, and then it sends it to where you want it to be. So if you want it to go towards a debt, you send it towards a debt to pay it off faster. If you wanted to go towards a savings, you send it towards a savings, and you'll set all of that up through the app. You can stash and pay off, so you can save for an emergency, pay off your debt, or do both. With Change, you can use Stash My Cash to reach your savings goals and automate your savings towards your debt with payoff. You can also split your savings between savings and debt payoff to optimize your finances to reach your dreams with less debt. If you want to boost your savings, you can set one-time or schedule savings based on your budget. You can schedule recurring boosts to reach long-term goals or a one-time boost when you have some extra cash. You can also see a snapshot of your progress. So your summary page will show you all of the progress you've made toward your savings and debt payoff goals. You can view all payments, savings, monitor your credit, and get personalized recommendations to maximize your savings or your payoff strategy. Now, this is a new tool, so we just started using it. We can answer questions. If we don't know the answer to it, we can definitely get that for you. But if you'd like to go in there, play around, if there is no change at all, let's say there's no change for that month, it will not charge a fee, okay? So definitely a great tool to use. Now, how can financial wellness help? So we can review credit reports. We can analyze monthly spending plans, reconcile accounts, can help with reducing debt, develop or change spending savings habits. We can help you with avoiding payday loans. We can use service provider referrals, and we can help you with opening an emergency share account. And here are some tools and resources as well. Financial wellness, you can submit an application. We can submit an application so that you can meet with a certified financial counselor. The Navigator is a source you can educate yourself. So there's videos, there's education material that you can go in there and do that. Savvy Money is a credit monitoring tool as well. And how can you reach us? So you can call 833-FIN-WELL, or you can email us at financialwellness@aacreditunion.org. And I believe we're going to go through the announcements, and then we will circle back for more questions.
That is correct, Fern. You are totally correct. Before we go into some more Q&A, what we're going to do is we're going to try to let you know, for those that are not members of the credit union yet, we want to make certain they take advantage of this, some of our products and services that we have, and some of the benefits. So for those that are not members yet, there's different ways they can do it. They can use the QR code on the bottom right of the screen here. You scan it, the application will come up in your phone, and your mobile device, your tablet itself. And when you complete it, at the bottom, you're going to see that there is something requesting a promo code. The promo code for today is going to be B as in boy, D as in David, 4412. And what this is going to do, we're going to apply the first $6 to your account. It's not a lot, but again, we want to make certain that you're able to open the account. That way, then you afterwards can start setting up your direct deposit. That way, you can start saving money, as Fern mentioned before in her presentation, that direct deposit can help you with that. You can stop by one of our branches, like today we are here in Philadelphia. You can stop by this branch and they can help you out with that as well. You can call our 800 number, toll free, 533-0035, and one of our operators or members will answer and assist you getting your account open. Or you can do it from your home by visiting at aacreditunion.org. Not only you can open the account and enter the BD code, you can learn more about the different products and services that we have at the time. Let me see here. I'm trying to get the page going. Okay, give me a second. I'm needing to grab the host from Fern. Give me a second. Here we go. I got it. So sorry for that. Again, this is live, so there's these little things going on. So this one, this slide that you see here is our offers. So if you go again, you scan this QR code here, it should bring up to the offers. You can always call us for the offers as well. And basically, you can learn how to save money because the offers will tell you if there's discounts for certain loans based on your direct deposit, based on the loan loyalty program, based on the new membership itself. So again, there are the offers that we have out there for credit cards, for mortgages, etc. So again, you can go in here, you can see what the credit union is doing to make certain that you are financially fit and your financial wellness continues to grow with our products and services. Now, for those that are on the webinar that are not members yet, and maybe they decided, you know what, Ferns makes sense. We need to do something for our future by saving money and getting ready for the unexpected. So what to do? Those that are members already can refer those that are not members, like a brother, a sister, a kid, the wife, the moms or pops, family members, those that live in the household, or if you're in the air transportation industry, maybe that coworker next to you that you heard that he's needing a car, that you heard saying that he needs to do a financial consolidation or something like that. You refer them. You will get $25 once the account is open. So again, you refer them, the account is open, you get $25, and you can do up to 10. So you can make a quick $250 now that the holiday seasons are not that far away. We are in the middle of August, so pretty soon it's going to be creeping up the holiday season. So it'll be nice to get that little bit of extra cash itself. Want to make sure that we can cover and make you aware of some other offers that we have, like Fern mentioned. If you're trying to save money and you're a member already, we have our 1-year share certificate that is at 5.33. It just went up. Usually when the Fed rate, the prime rate goes up, usually savings rates also go up. And in this case, the share certificate went up to 5.33. All you need is $1,000 to open one, and it's good for 12 months, so it's good for a year. You can do it for a higher amount than 1,000, but again, we want to make certain that everybody has a chance to save and earn a little higher interest on it. There's the credit cards, as Fern also mentioned, that we have that you can earn either cash back, either you can earn some connection points with that card itself. We have our mortgages that can help you get that credit card, and you can get even a higher amount of connection points, or the home equity line of credits that we have that you can probably get $250 cash back as rewards. But once you talk to one of our loan officers or subject matter experts itself, they will help you get that offer itself. Again, wanted to go back here. to the questions. Since we have like 5 minutes, I'm going to go back to this page here because I believe there's a lot of people that are going to be wanting to call and make certain that they get some help from our financial wellness team itself. There's no cost. There's Spanish speakers as well, to my understanding. They can do the visit online. So if you're not in Dallas, remote like I am right now in Philadelphia, you can reach out and they can help you get that going with that. Let's see what we got over here, Fern, and let's see if we can answer some questions or what kind of comments we have. Um, Somebody loves the option you mentioned about hiding the account. So by hiding, it means that it's there, but you don't know about it, right?
It's there, but you cannot see.
Right. Um, Somebody gave a tip about pay your bills on time so you don't get late fees. So that's pretty savvy. Make sure, especially if you do it
Those
online,
can add
right?
up.
Right. Make sure you do it online. You can pay your bills online, so you can do that through our programs as well. Somebody is so savvy that instead of going to a regular retailer store, they go to Marshalls and TJ Maxx to get the savings on name brands itself. Um, what does it say? I want to save but don't want to pay interest on savings. They're saying.
Oh, okay. So it's the opposite of a debt. So when you have a debt, right? You have a credit card or you have a loan or an auto loan, whatever debt it is, you are paying interest on that debt. So you're paying interest depending on what the interest rate is, you're going to be paying interest on that. With savings, your financial institution pays you interest. So he mentioned 5.33%. That's APR, so it's an annual percentage rate, so it's yearly. So you get paid that interest based on the balance that you have in the account. So there are two different, I know it says interest, but you're earning interest and it's compounding interest. So compounding interest means you earn interest on top of whatever you already have. So if you have $12,000 and then you earned interest on that. So it's interest on top of that interest. So that's what compounding interest is. So don't think that when it says interest on a savings, don't think that you're going to pay interest. It means that they will pay you interest.
Correct, Bert. Yeah, that
Good
5.33,
question.
yeah, that 5.33 mentioned, again, is for a share certificate itself for 1 year, 12 months. It starts with $1,000. Uh, our savings account is paying over 2% as well. So you're still earning interest on the money you're savings. Our checking accounts also have a really good rate as well. That way they can save even through their checking account. And then, like you mentioned before, also there's IRAs, there's Roth IRAs that members can open also to save money and at a higher interest rate itself. Let's see what else we got. Uh, Somebody is going to need, I guess this person is not able to see, they logged in into the CU app and they don't see the option of the menu bar itself. So what I'm going to suggest to this individual is feel free to call our 1-800-533-0035 or your local branch, and they will walk you through the process of it to make certain that it's there where to pinpoint you correctly to that itself. Um, let's see what else we got here. Is there somebody saying, I already have savings and no credit card debt. What else can I do to recession proof my finances?
Great, you're ahead of the game. So you're ahead of your well, your finances are recession proof. You don't have no debt, and that means no debt at all. So you have no debt, and you have a 3 to 6 months of savings, and you probably have additional savings. So that means that you're good. I mean, you could always invest more, right? You can probably talk to Flagship Financial to do that. Um, and they can help you with investing. That's also going to be within the credit union. So definitely do that.
Correct. Somebody's asking how can they get copies of this presentation? As mentioned at the beginning, when you get the survey, just request it there itself. We are almost at the 2 o'clock mark, Fern. So
Mhm.
I want to make sure that our audience make sure you go and check out our events in our American Airlines Credit Union webpage, aacreditunion.org. Visit the events page. You can see all the different webinars that are coming up. Next week is Aviation Week. Make sure you check your local branch. Make sure you go into the website, and there may be chances for you to win $1,000. So take advantage of that next week. Again, there may be some events happening at your local branches. Visit them, and there's three $1,000 prizes that we're going to be giving away itself. There may be also a gift for those individuals that open the accounts as well next week and during Aviation Week. So why not take advantage of that? Want to make sure that you visit the page again, see our webinars yourself. Thank you for tuning in. Remember that if we didn't get to your question, one of our subject matter experts will get back to you itself once you can put it on the survey itself. Check out, once again, the webinars out there. Follow us on Facebook, Instagram, Twitter, YouTube. Make sure you subscribe, you like, that way you can get notifications when we have new videos out there. We're going to have a lot of financial tips and announcements during these webinars. So if you didn't get to hear it now or not clear enough, uh, you can review it there. And again, you can always go in our YouTube channel, American Airlines Credit Union. You can see different topics that we have covered in the past, as well as this one itself. Um, on behalf of Fern and our crew in the back, Brenda, Sarah, Nazario, our host, Lorianne, and her crew here at Philadelphia, we want to say thank you for joining us. Stay safe, stay healthy, continue to be happy, and remember to know where to reach out for any financial needs. Your local American Airlines Credit Union. Thank you again. Have a good
Thank
one.
you.
Stay safe.
Bye bye.